This is Macro Voices with hedge fund manager Eric Townsend, the free weekly financial podcast targeting professional finance, high net worth individuals, family offices, and other sophisticated investors. Macro Voices is all about the brightest minds in the world of finance and macroeconomics telling it like it is, bullish or bearish, no holds barred. Now, here are your hosts, Eric Townsend and Patrick Ceresna.
Macro Voices episode 356 was pre-recorded in early December to air on December 29th, 2022. I'm Eric Townsend. Happy holidays, everyone. This episode of Macro Voices was made possible by Respect Energy, a leading European trader of renewable energy and a one-stop shop for all green energy investors. We're taking this week off to give our production staff time with their families, so we'll be deviating from our usual show format to bring you part 2 of our 2022 year-end special. The theme of this special series is nuclear energy and how to invest in it. There will be no crude update or post-game segment this week, and then we'll return to our usual show format on January 5th. My guest for this week's feature interview will be Uranium Insider newsletter editor Justin Huhn, and the topic is investing in all things nuclear. We're going to assume that you already heard last week's interview with nuclear engineer Mark Nelson, who introduced many of the concepts and technologies Justin and I will discuss investing in this week.
And I'm Patrick Ceresna. Eric, what's your plan for part 2 of our year-end holiday special on nuclear energy? Are you going to hit us up with another monologue before the feature interview like you did last week?
No, this week we're going to jump right into the feature interview with Justin Huhn. And since our listeners are probably eager to go out for New Year's Eve rather than fending off in-laws like they were last week, we'll try and keep it shorter and tighter this week. Then once our listeners have the scoop on how to invest in this space from Justin Huhn, I'll save my 15 minutes of fame for the end of today's podcast when I'll give my own summary and conclusions for the 2-part series, tying together concepts from both last week's interview with Mark Nelson and this week's interview with Justin Huhn by presenting my own investment thesis for how I'll be playing the coming bull market in nuclear energy.
Okay, let's dive right in then. Eric's feature interview with Justin Huhn is coming up right after this message from our sponsor.
If you invest to bring about a world powered by green energy, you should meet Respect Energy, a leading European trader of renewable energy that serves as a one-stop shop for green energy investors in Europe. Respect Energy brings together independent power producers, accredited and institutional investors holding assets in renewables, or undertaking investments in new green energy production, such as wind and solar photovoltaic power plants. More than 600 institutional and accredited investors have already entrusted Respect Energy with the sale of their electricity production, portfolio management, O&M services, EPC, and project development. If you want to invest in green energy in Europe with the help of a trusted partner, contact Respect Energy today and ask for a tailor-made solution. For more information, visit respect.energy.
And now, with this week's special guest, here's hedge fund manager Eric Townsend.
Joining me now is Justin Huhn, a regular Macro Voices listener and editor of the Uranium Insider newsletter. Justin, it's great to get you on the show. I want to first congratulate you. You launched your newsletter in August of 2019. I wish I had discovered it then. I've only been a subscriber for a couple of months, but I'm absolutely loving it. You are up right now 359% since inception, August 19th, on the stocks that you've recommended in your newsletter. At one point, that was 450%. The market has been down a bit, obviously, with the rest of the market down. But congratulations on terrific performance, and glad to have you on the show.
I'm really pleased to be here, Eric. Thanks for having me. Like you mentioned, I've been a listener for many years, so I'm really excited about our conversation today.
I am too, and listeners, Justin has provided a slide deck to accompany this interview. You'll find the download link in your Research Roundup email. If you don't have a Research Roundup email, just go to our homepage, macrovoices.com, click the red button above Justin's picture that says Looking for the Downloads. Justin, the topic is going to be investing in all things nuclear. And listeners, if you missed it last week, we had Mark Nelson on talking about understanding all things nuclear, especially as we get into the advanced nuclear technology investment opportunities. You'll want to have heard that interview first, so be sure to check that out. I want to jump right in, Justin, with what I think is the most important question, because let's face it, nuclear power has been a really good idea for decades, but frankly, it's been a horrible investment because, for good or for bad, the public perception of nuclear is anything but good. And obviously, in the wake of Fukushima, it's only gotten worse. So why would investors want to think that that's changing now? What are the important catalysts that need to happen, and how do we get from where we are today, where, even in an energy crisis in Europe, you've got countries like Germany that are famous for their knowledge of engineering and technology shutting down nuclear plants. So how could this be a sensible investment trend that we want to be long?
That's a really good question. I think it's involves a pretty in-depth and nuanced answer, so I'll do my best here. But to your point with Germany had, I believe it was 17 reactors at the time that the Fukushima Daiichi accident happened. They shut off about half of their fleet within a couple of years with the plan to phase everything out by the end of this year. They have 3 remaining reactors online. Those were just extended to April. It's possible that they get extended beyond that, but we're not holding our breath. I guess the bright spot with the Germany situation is that it's an example for all to see of what not to do. So Germany, not only did they phase out nuclear, which they have a fantastic, very highly efficient fleet of nuclear reactors in Germany that have been shut down for purely political reasons. There's absolutely no reason to shut these plants down early. In doing so, they vastly expanded both solar and wind, in addition to biomass, which, by the way, biomass in Germany, which qualifies for quote unquote green energy, is literally trees being clear cut in the United States and shipped across the sea and burned to boil water. I mean, that's their green energy and biomass. But their multiple hundreds of billions invested in solar and wind have basically resulted in a net drastic increase in carbon emissions and general air pollutants in the country. It's the most polluting country, with an exception of Poland, in the entire EU. Why is that? Well, when you shut down your baseload clean energy, nuclear, and you expand intermittent renewables with insufficient backup in terms of, let's say, battery supply for grid scale battery storage, when the sun isn't shining, the wind isn't blowing, the only thing they have left, especially when Russia cuts off gas to Germany, is coal. That is a baseload power source that can cycle up and down easily, that can make up for the lack of energy that's being contributed to the grid by their intermittent sources. So this is the Energiewende program. Over the past decade, they've phased out nuclear, gone all in on wind and solar, and it's been an abject failure. They're paying the highest rates they've ever paid. GDP is in a downward spiral in the country. Industry is closing up shop. Volkswagen is thinking of moving out of Germany. I mean, it's just been an absolute mess. So the good thing about that is it's a shining example of what not to do. And so, and that's just kind of this general theme of this is what will happen as countries, if countries turn away from efficient, energy-dense source of electricity, such as nuclear, with a very, very high EROI, or energy return on investment, compared to solar, especially buffered solar, that is solar with some sort of backup, whether that's natural gas or coal or batteries, with an EROI of less than 2 to 1. And society, generally speaking, to maintain the way that we live now, we need energy sources with a minimum EROI of 7 to 10 to 1. On slide number 5, there's a graphic that shows the various sources of energy and their corresponding EROI. I think this is a theme that is only going to grow, because the countries that will embrace high EROI energy sources are likely to grow, to be richer, to succeed, to prosper, and have lower costs of energy, and can therefore attribute those lower costs to a growth in GDP, a growth in industry, et cetera. To answer the second part of your question, or perhaps it was the first part of your question, nuclear has been a great idea for a long time. Why now? Well, after the Fukushima Daiichi accident and Japan shutting down all 54 of their reactors, there was a vast oversupply of uranium, the feedstock for nuclear energy. And this took a very, very long time to work through. at the same time that Japan shut down. So that was about 10% of global demand. Shut that off pretty much overnight, and Germany phased out about 10 reactors in relatively fast fashion. You had the Kazakhs continuing to ramp supply. You had mines that had locked in higher price long-term contracts continue to produce. And it wasn't until 2016, 2017, 2018 that we had mines actually start to go into care and maintenance. So Cameco's Rabbit Lake, Paladin's Langer Heinrich in Namibia, Cameco's MacArthur River finally in 2018. And it took another couple of years to work through that abundant above ground mobile inventory, which brings us kind of up to today where this vast oversupply has mostly, if not entirely, been worked through, yet nuclear continues to grow. So if you look on slide 2, nuclear is actually a growth sector, which flies in the face of the sentiment that seems to be relatively prominent around nuclear. And that tends to be dissipating right now. There certainly is a re-embracing of nuclear as a clean energy, as it should be. There's bipartisan support for nuclear in the United States. Nuclear has been approved for the green EU taxonomy, low cost, quote unquote, green funding opportunities in the EU. And right now, there are 60 reactors currently under construction. That's 58 gigawatts. There's about 360 gigawatts currently globally. 112 reactors are planned. That's another 120 gigawatts. And 324 reactors are proposed. A lot of that is coming from China. 22 reactors in China alone under construction right now. And they are planning, China thinks in decades. They're planning to have 200 gigawatts of nuclear by 2035. And currently they're sitting on around 52 gigawatts. So they're looking to quadruple their nuclear fleet in the next 13 years, which is obviously quite the undertaking. But there's much more nuance to the why now. But I would say just the broad picture that shows you on slide 1, this is the World Nuclear Association's fuel report from 2021. They do this every 2 years, so it'll be an updated one next September. This shows you the upper scenario. Now, they put out 3 scenarios to model out supply and demand. And why did I share the upper scenario? The reason is because there's been a major de-risking of nuclear in the United States and in the West generally, with funding support from the Inflation Reduction Act. And so we have not only a de-risking of reactors in the West, but we actually have new reactor builds happening in a lot of countries in the West, as well as in the East. Just this last week, India announced they want to build 21 new reactors by 2031. Just a major step towards clean baseload energy. And so we have this growth sector. We have a significant disjunct between supply and demand. And we need the commodity price to rise substantially in order to incentivize those projects on the margin. That's kind of the long and short of the greater thesis. And there's some more short-term and long-term nuance I can get into as we continue this discussion.
Justin, with everything going on in the world, let's talk about the bifurcation of this market, specifically with regard to China, Russia. All of a sudden, we're not friends with them. We may have trade relationships cut off with them. Is that going to play an important part of this market and the bull trend that you see coming?
That's a really, really important question, especially when it comes to the short and midterm for this investment thesis. Essentially, the market is bifurcating. This is not historically new. This has happened in the past, but what we're seeing is a bifurcation between the West and Russia. Russia is a major player in both conversion and enrichment, which we can talk about the fuel cycle a bit more in depth later. But it's really, really important to understand that this market has bifurcated and is likely to remain so. And that has very, very large implications in the fuel cycle and especially for uranium demand in the coming years.
Justin, I want to talk about the time frame that you envision for the coming market in all things nuclear energy, because it was really fascinating to me to be introduced to your newsletter. I was thinking, at least in my own perception about nuclear, I tend to think about long-term trends. And it was so validating for me to say, okay, I know I'm good at long-term trends. Sometimes I get excited about a long-term trend without thinking about what the short-term looks like. I think a lot of the arguments that I've seen in your newsletter are focused on why, with everything going on, including the bifurcation that you just talked about, there's a really strong bull argument for uranium in the next year or two. I'm actually thinking about much farther out because, from my perspective, uranium and nuclear energy in general are never really going to take off until we get through a major sea change of public sentiment. And I think it's going to take an energy crisis to do that. And unfortunately, I think that energy crisis is coming pretty soon. So I was thinking about the reason I'm excited about nuclear energy is I think after the energy crisis, we're going to have a forcing function where all of this political virtue signaling of, renewables are the way to go, it appeals to a certain political sector. I think the entire world is going to get pissed off and say, okay, this whole exaggerated climate policy thing has caused an energy crisis, which has put the world in a world of hurt. We need politicians that are going to have a completely different strategy. And I think that's where you're going to see a huge nuclear renaissance. It was fascinating to me to not really see that sentiment in your newsletter. Is that just because you're focused on the immediate investments? Do you see it that way as well? And what do you think about in terms of, is this a bull market for the next year or two or for the next decade or two?
That's a good question, Eric. Well, I would say definitely I'm with you in terms of looking at investments for the long term, generally speaking, as a fundamental investor. We definitely are very bullish for the long term. I suppose if you've noticed us focusing more on the short and the midterm, that primarily has to do with the fact that we follow the sector on a daily basis. And so the daily ups and downs we pay attention to, which kind of is contrary to being a long-term investor, right? But it is what it is. That's part of the service that we provide to our newsletter subscribers is maintaining a very close watch on the sector day in, day out. We watch the ETF flows and the flows into the Sprott Physical Uranium Trust, look at the charts on a daily basis, et cetera. Though we have both a short and midterm and a long-term vision for this investment thesis. If you look at the last slide number 12, I lay this out simply with a number of bullet points here on both the short and midterm and the mid and long-term investment theses. So, I'll talk about the long-term first because I think that's really should be the focus of anybody that's kind of a new entrant into this sector, because the short-term can be notoriously volatile. The stocks don't always move in the way that you think that they should based on news flow, based on sentiment, whatever it might be. And then they just absolutely take off when it makes no sense. But if you zoom out and you actually look at the long-term trend, we're clearly in a long-term bull market, and we think this is going to last for many, many years. So what's the long-term thesis? The primary thesis here is we are in year one of a long-term term contracting cycle. The way that utilities generally buy uranium is through long-term contracts. It's not on the spot market. And we've had the last decade an underinvestment in terms of term contracts by utilities because they've been able to source material both on the spot market and through something that's called a carry trade. And the carry trade was essentially traders would sell shorter term contracts, 2, 3, 4-year contracts to utilities, and then they would go out and source the material. They would add in the cost of capital, a small profit margin, and they would hold that material on their books. Now, that went a long way to clean up the above ground supply, as I already previously mentioned, was there from post Fukushima. But it's only very recent that this supply has been worked through. The carry trade is essentially dried up. The spot market has dried up, and utilities are coming back in mass to the table to sign term contracts. So this year, we've already seen 112 million pounds in long-term contracts. That's the highest level of long-term contracting since 2012. And it still is not a replacement rate contracting year. What I mean by that is on an annual basis, utilities will consume globally about 175 to 180 million pounds of uranium every single year. And to have, if you look at the chart on slide number 12, you'll see for the last many years, we've had less than 100 million pounds of long-term contracting year over year for the last decade. So this year is the first year, in my opinion, of what is going to be a multi-year long-term contracting cycle. A couple of points on the long term. Untenable supply deficit means a doubling of the current price is necessary to incentivize marginal cost of production. The projects that are on the margin in terms of their cost of producing, those will have to come online to fill this supply gap if this cycle and if this sector grows in the way that it's projected to grow. We're going to need that uranium out of the ground, and it's going to cost more than $50 a pound to make it happen. Nuclear renaissance, this has to do with, there's so many points here. Japan turning their reactors back online. They've restarted 10 reactors now. They're putting in writing this month. It hasn't yet happened yet as of the time we're talking here, Eric. But this month, Japan is putting in writing their plan going forward. And also keep in mind, Japan is the only country that has suffered the terrible outcome of nuclear attack and the nuclear meltdown at Fukushima Daiichi that's most recent in everybody's memory. Yet, Japan is majority in favor of nuclear. That's something that I find absolutely fascinating. So Japan's coming back. South Korea did a 180. United States is extending their fleets and pushing into advanced nuclear. We can talk about that later. On and on and on. There's a full-on nuclear renaissance starting right now. Nuclear, as I mentioned, is the highest energy return on investment. And to your point, I think the intelligent countries that are thinking in terms of decades are already doing this. It's not going to take an energy crisis for China to be building 150 gigawatts in the next decade plus. It's not going to take an energy crisis for South Korea to pivot. The United States is not quite there. We're not seeing a total energy crisis here yet we're starting to embrace nuclear. That's a very positive sign, or re-embrace it. Then again, the potential for robust uranium supercycle is really what we're talking about here. And I think the future is very bright. One more point I'd like to make on the long term is if you go up to, back to slide number 4, the IEA, the International Energy Agency, they do a report every year called the World Energy Outlook. Now, the IEA is coming from a standpoint of carbon emissions and climate change, right? So whether or not you or I might be in line with that sentiment, we have to look at what they're proposing and where things are going, regardless of how we feel about this. And the IEA is saying exactly this. They want to double nuclear, more than double nuclear, to 5,400 terawatt hours by 2040. That's a more than doubling in the next 17 years. This is coming from the International Energy Agency. This is not from some bullish slideshow from an investor. This is the IEA saying, hey guys, this is where we need to go. And in my personal opinion, whether or not this has to do with climate change or a peaking of cheap oil production, the world is going to need to continue to move in the direction of an efficient energy source, and nuclear is the only thing that really fits that bill if you want to move away from fossil fuels. Long term, the setup is fantastic. The short term to the midterm, so let's say the next 12 to 18 months, the big potential for this to move and potentially move violently to the upside has to do with a spot market with very little material there and the existence of the SPUT trust. So that's the Sprott Physical Uranium Trust, affectionately known as SPUT. The way this vehicle is set up, this is a physical uranium trust. They buy and hold uranium. When they buy uranium, it goes to uranium heaven, as uranium Twitter community likes to call it. They're not sellers of uranium, and they have an ATM. And so when the trust is trading at a premium to its net asset value, they issue trust units into the open market, they raise cash, they buy physical uranium. So this is a means of investors to actually literally put a squeeze on into the physical market by buying this trust. It has happened multiple times since the inception of this vehicle's ATM. That was August of last year. We saw a huge squeeze last year coming from financial flows into SPUT, where they purchased 10 million pounds in just over a month. They sent the spot price from the low 30s into the mid 50s in the course of about 2.5 months. And uranium equities doubled and tripled in that same time period. Happened again a bit this last year in March and April, before markets generally went super risk off, kind of late April, early May, and have kind of stayed that way for the remainder of the year for the most part. But this vehicle exists, and it isn't going to take a lot of capital flow to really, really put a squeeze on that physical spot market. So the potential is there for there to be a sharp spike in price, and it could happen in a relatively fast fashion. The chances of that happening are not zero. We're not necessarily betting on that happening. We like to take the longer term view where we think this could very easily be a 3 to 5 year bull market, and potentially much, much longer if things go the way we believe that they will.
Let's dive into the opportunities to invest in this space. We're going to break it into two sections, starting with public equities and other things that are available to everyone, including retail investors. And then we'll do a section for the investments that are only available to accredited investors and institutions, such as private placements in the advanced nuclear space. Let's start with what's available to everybody. What's a quick table of contents of what we're going to talk about in that category?
The investment opportunities in the space for both nuclear and uranium consist of essentially uranium mining equities. the physical trusts or the physical funds that hold physical uranium, the ETFs that hold a basket of miners, and then there's a couple of plays that you can expose yourself as an investor to elements of the fuel cycle, conversion, enrichment, et cetera.
And what other opportunities exist in private equity or elsewhere for accredited and institutional investors?
Well, I think there's a lot of opportunity for private equity in terms of advanced nuclear companies. There's dozens of companies right now working on designs for advanced nuclear and SMRs. Most of those are private. There's one that went public recently. That's NuScale. There's another going public next year. That's X Energy. And in terms of accredited investors, there's obviously always private placements happening throughout the sector, as there are in any resource or metals sector.
Justin, as an entrepreneur and technologist, I personally felt just so excited about being part early on in this whole nuclear technology trend that I see coming, particularly the small modular reactors, molten salt reactors, thorium, all of these exciting new technologies. But I had the opportunity to talk off the air with Mike Alkin, the very highly respected hedge fund manager in this space. And he just said to me, look, Eric, you can try to be smarter than the rest of the market and figure out who's going to win the bake-off, if you will, between SMR designs and try to figure out who's going to get it right and bet on that. Or you can take the approach that Mike takes, which is don't try to be expert on something you're not expert on. Just understand that no matter who wins the contest, they're going to need uranium in the end. And Mike said, I want them to buy their uranium from me, Mike Alkin. So his approach is forget about trying to understand all of what's coming in advanced technology. Just focus on the fuel and the people that make the fuel. What's your approach and your strategy? Do you think it makes more sense to invest in the fuel and the miners and so forth, or in the advanced technologies?
Yeah, I would say we have a similar approach as Mike does. I'm a big fan of Mike and his work, and he's been a good friend throughout this process. I think that he has a very intelligent approach here. While at the same time, I think there's incredible opportunities to be had in the coming years for advanced nuclear and SMR companies that largely are private companies right now and will be slowly going public. That's an exciting space. We're definitely going to be watching that going forward. But as of right now, I think that it's the easiest investment case is to understand where the commodity is going and who will be profiting from mining that commodity.
I'd like to move now to slide 8 in your slide deck. And what I'm going to ask you to do is explain to our listeners this whole process of how the nuclear fuel goes from coming out of the mine, conversion, enrichment. What are all these things? But along the way, let's talk about where the investment opportunities in. So this starts with uranium mining. How does that work? Who are the players?
So uranium mining is the source metal that it goes through a variety of processes in the nuclear fuel cycle to result in fabricated uranium fuel that goes into the nuclear reactor. This is a fissionable material that heats up, boils water, and spins a turbine. Really, what we're talking about is a very complicated way to boil water. But the energy density is so incredible for uranium and for nuclear that this whole process, considering all of the energy that goes into the mining and the fuel cycle, still has an unbelievably high return on energy investment. So starting off is the mined uranium. This comes out of the ground via an underground mine, an open pit mine, or an ISR mine, which is a series of injection and recovery wells using an acidic or an alkaline fluid or an oxygenated fluid to interact with the ore body and the mineral and extract it. Very low impact. That's how the Kazakhs mine uranium. That mined uranium, so the mined uranium and the uranium miners is the prominent way for investors to have exposure to the nuclear and the uranium investment thesis. Most of the companies are uranium miners or prospective miners, explorers, developers, and producers. There's about 65 companies publicly traded that are uranium miners across those three types of miners. And then getting into the rest of the fuel cycle, there's a few other opportunities. So that mined uranium, that's the yellow cake. That's goes through mild processing to turn it into uranium oxide. That's the yellow cake, the yellow powder that everybody knows. But that material can't be enriched in the current enrichment centrifuges that we have, the gas centrifuge technology that's used all over the globe. So it has to be converted into a gas first. That goes through a conversion process where it's converted into uranium hexafluoride, or UF6, also called natural uranium. That UF6 gets sent to an enricher, which, by the way, for conversion exposure in this market, there's really only one option right now, and that is Cameco. Cameco not only has the Port Hope conversion facility in Canada, they also have a 49% stake in Westinghouse, and Westinghouse has a idled or shuttered conversion facility called Springfields in the UK. That's pretty much the only way for a public investor to have exposure to the conversion process. That converted uranium, or the UF6, goes to the enricher. The enrichment process is basically where this gas is placed into a centrifuge and spun at very high speeds for a very long time. And the reason it does that is to separate the U-235 and the U-238 isotopes. I know that Mark went into this a bit, so I won't spend a lot of time here. The U-235 isotope is the fissile isotope in natural uranium. It's about 0.7% of the total mass. That needs to be enriched up to about 4.5% in order to be utilized in most of the world's reactors. So that enrichment process, there's a few options for investors to have exposure there. One would be through a company called Silex. They own the technology for global laser enrichment. Cameco is a minority shareholder in GLE. This is sort of the next wave of enrichment technologies. It's very prospective, very exciting, could be much lower costs. And there's some concern around potentially this technology getting in the wrong hands around proliferation. We'll have to see how that plays out. As of now, they're looking to start some production of enrichment using this laser technology. I believe it's 2026 in the United States, re-enriching tails material from previously enriched uranium. You also have a company called Centrus. Centrus it doesn't actually own their enrichment facilities, but they are an operator of these facilities. They have largely relied on Russian material. So that's a little bit of a tricky one. Definitely do your due diligence. They did just get a contract awarded from the DOE to establish the first domestic HALEU circuit. That's high assay, low enriched uranium. Eric, I know you know HALEU is the largely going to be the fuel of choice for a lot of these advanced reactor designs and SMRs. And the United States is moving as quickly as they can to get this circuit established so that we can expand nuclear here domestically, especially with advanced designs and small modular reactors. I think that's all there is in terms of enrichment exposure possibilities. Going forward, that enriched uranium then is deconverted back into a solid form and then fabricated into fuel pellets, which are placed into fuel rods of various design. That fabricated fuel is unique to each individual reactor. And then it gets placed into the reactor and it stays in that reactor core, usually for 12. Each core stays in for a number of years. The reactors swap out 1/3 to 1/4 of their fuel load every 12 to 18 months. And then from there, you go into spent fuel storage and waste disposal. And I know Mark got into that, so I won't go into it.
Okay, Justin, terrific answer. I want to go back and ask you a few questions along the way. I didn't want to interrupt you because you were on such a roll there, but let's go back to the very beginning of the process, mining and milling. So I'm assuming that similar to the gold market, this is broken up into junior companies that are exploring for and looking for uranium, and then senior companies that are actually producing it. So in the mining space, before we even get any yellowcake uranium, what's your general approach? I think you focus mostly on the juniors, and juniors, I think that I've seen in your portfolio appear to be pretty close to reaching production. How do you think about the investment strategy for investing in miners themselves?
Well, we tend to focus on the developing companies. We think that's really kind of where the sweet spot is in terms of having a lower valuation, higher upside potential, but not necessarily with the risks of the explorers that have yet to make a significant discovery. Obviously, the larger caps, the producing companies have less risk, but the developers, I think, are really where you can have substantial upside potential for a company that will be getting into production and actually be producing cash flow and producing uranium during a bull market. And that's primarily where we focus on. Obviously, each individual investor has to look at their own portfolio, their own risk tolerance, their own goals for that investment to make that decision. But we tend to focus on the developers. With that said, a small cap explorer, just like in the gold and silver space, can make a significant discovery in a bull market. You can have really incredible returns in the uranium bull market for an exploration discovery company.
Now, that first white arrow between mining and milling and conversion would be the actual U3O8 yellowcake uranium. If you want to invest in just the Mike Alkin doctrine of I want to own the uranium, Sprott Physical Uranium Trust is one way. YCA, which I don't know what that stands for, but that's another ticker symbol that I know is in that space. What do people need to know about investing in the physical yellowcake uranium? Is there anything that we need to understand there, and who are the players?
So, you can actually physically own uranium. That is not against the law. I know there's regulations about it. I know it's a bit more complex compared to owning a trust or a fund that holds the physical uranium. In fact, when Sprott took over Uranium Participation Corporation in July of last year, there were a number of hedge funds that were holding actual physical uranium. It's not like it's in a can in their garage, right? They own it on paper while it sits at a conversion facility. But they ended up selling that uranium to Sprott in exchange for the trust units, because the Sprott Physical Uranium Trust is a highly liquid vehicle and you don't have to actually hold uranium on your books. So unless you want to hold the physical stuff yourself on paper at a conversion facility somewhere in the world, the best way is through either the Sprott Trust. YCA, as you mentioned, is the Yellowcake PLC. That's a physical fund. They buy $100 million worth of uranium from Kazatomprom every year. And ANU Energy will be launching next year based in Kazakhstan. They'll also be buying uranium from Kazatomprom. And they already raised $74 million. They're looking to do an additional $400 million in early Q2 and then another $100 million upon IPO. So that's going to be a pretty chunky amount of purchasing next year from that vehicle. And yes, owning uranium is probably the lowest risk and best risk reward in the space, because the likelihood of seeing much lower uranium prices is very, very small, and the upside potential is very, very high. So a liquid vehicle like SPUT is an easy choice for institutions and those wanting a less risky bet and with good liquidity.
Now, there's another aspect of this that I want to ask you about, because my thinking on this has been as follows. I'm really, really excited about this space, but I don't think that the broader bear market in the stock market is over yet. I think we've got another big wave down. I don't think the bottom is in. It seems to me that if you want to get into this space, and you kind of feel like probably those mining companies are going to get dragged down with everything else when the bear market takes hold. Obviously, we're trying to speculate and time the market, which can be a dangerous thing to do. But if you're inclined toward doing that, it seems to me that the safer thing right now, if you're going to eventually own both physical uranium and mining stocks, is to buy the physical uranium first, maybe wait for a lower point in the stock market, the broader stock market, before diving into the mining shares. What do you think about that strategy?
That seems like definitely a risk-averse strategy, so I wouldn't argue against it. If you actually track, let's say, a basket of uranium miners and chart URNM against the commodity itself, against either the SPUT Trust or the UX1, you'll see that we are in a long-term outperformance of the S&P, beginning essentially at the start of the bull market, which in my opinion was December 2020. We've had obviously our cycles this past 12 months, outperforming, underperforming the S&P. I think that when the commodity starts moving and starts moving substantially to the upside is when really you could have substantially more leverage with the miners. In the short period, I don't think the downside potential is very large for, let's say, the Sprott Physical Uranium Trust. It's sitting right now at a 10% discount to NAV. The lowest it's ever traded is something like a 17% discount to NAV. It didn't stay there for very long. So betting on the commodity rising is a much, much safer bet than the miners at this particular stage. But obviously for a mid to long-term hold, you'll have far more leverage with the miners.
Let's move on to conversion and enrichment, because both of those processes are things that seems like all the experts agree we've got a big problem now with the bifurcation of the global economy. All the supply of this came mostly from Russia. Probably that's going to be encumbered in terms of trade relationships. It sounds like for conversion, Cameco is really the only investment play in the conversion space. Is that right?
Correct.
Okay, and the next white arrow between conversion and enrichment would be physical UF6. Now, I'm guessing as a gas, that's probably not practical. Could there be such a thing as a physical UF6 uranium gas trust? Would that make sense? Because it seems to me if you think that conversion is going to become a bottleneck in this process, buying physical UF6 or some kind of call on physical UF6 would make a lot of sense to me. Is that a possible investment?
Not really, no. Uranium Participation Corporation, before they were taken over by Sprott, did hold a little bit of UF6 in addition to U308. But for whatever reason, when Sprott took it over, they decided to hold only U3O8. So they swapped the UF6 for uranium. And, it's interesting because even though the market is very, very thin for UF6 right now, it's conversion that's at all-time highs in price. So the actual service itself is at all-time highs, whereas UF6 is not sitting at all-time highs. It's in a very strong uptrend and it's up substantially this year. But, owning a company like Cameco that has not only the existing Port Hope conversion facility that's up and operating and printing cash right now, but they have that minority share in Westinghouse with the potential for Springfields to come online. So you can get conversion exposure through Cameco.
Let's move on to enrichment, the process of using either centrifuges or in the future, perhaps this new laser enrichment technology to separate the U-235, which is the stuff you want to use in order to make fuel, from the U-238, which is the stuff that you don't need in order to make fuel. You said earlier that this is really the big bottleneck that everybody's expecting, with Russia providing most of the capacity for enrichment. If we don't have access to Russia, how do speculative investors benefit from that impending loss of Russian capacity?
Well, that's a really interesting question. I'm going to argue that the biggest benefit is going to come to the uranium miners, and I'll do my best to explain that if you want me to get into this bifurcated situation and what it means for the fuel cycle.
The loss of enrichment is going to benefit the miners? I would have thought you'd say the enrichment companies, whoever's doing that, or whoever has capacity to add enrichment facilities, would benefit.
Yes, I do believe that the uranium miners will be the biggest beneficiary, and I'll tell you why. The current enrichers, which in the West are Urenco and Orano, the current enrichment capacity for Western enrichers is approximately 27 million SWU. Okay, that's separative work unit. That's the actual capacity to do the work of enrichment. It cost about $1.5 billion US to expand 1 million SWU. And let me tell you, neither of these entities are going to be expanding their capacity unless they have the enrichment contracts in hand to justify that capital risk and the work to expand. They can expand. It's going to take years. This is going to take 3 to 5 years. This is about the time frame that we will potentially see laser enrichment come on the scene, which is Silex and Cameco's co-ownership of Global Laser Enrichment. That's an exciting technology, but it's still years away. So what does that mean for right now? Well, conversion is really the pinch point because you can't artificially increase capacity through any sort of mechanical or chemical means other than actually building out more conversion facilities. Enrichment, you can artificially expand capacity by altering the process and essentially raising what's called the tails assays of the enrichment process. So the tails are essentially the material that's left over after the enrichment, right? Like you mentioned, you're trying to separate U-235, U-238 to enrich the percentage of U-235. What you end up is a U-238 rich tails material after that process. That material can be re-enriched, and that has been in the past. But really what we're talking about here is for the enrichers to pump out more material faster with the same capacity that they currently have. What they can do is utilize less SWU so that they spin it faster, but they have a higher tails assay. So there's more of the good stuff, more U-235 left over in the quote unquote waste material of this process. So when an enricher signs an enrichment contract, they're actually specifying the tails assay in that contract. And typically in the past, that has been somewhere around 0.2 tails. Now, if your listeners go to slide number 10, this kind of shows the demand for natural uranium relative to the tails assay within an enrichment centrifuge process. So what the Western enrichers are already doing are not only both increasing the operational tails assay, which means they're utilizing more uranium on the front end. They actually have to push more uranium into the centrifuge than was provided to them as feedstock by the utility that signed that contract. That is overfeeding, and the enrichers have to actually go out into the market and buy UF6 to cover that, which they are. They make up for that in rising SWU prices. So the actual cost of SWU, the cost of enrichment rises, which it has been. In fact, spot SWU made a 30% jump last month. So we know that this is happening right now. But what they also do, and this is really the secret sauce of why this is going to benefit the miners more than anyone. The Western enrichers are, like I said prior, they're only 40% of global enrichment capacity, similar to Russia in all of the West. But there's 70% of demand in the West, okay? So what they're doing is new contracts that the Western enrichers are signing with Western utilities for future delivery. We're talking 2027 through 2032 and possibly even beyond that. And utilities are acting on that timeframe currently for contracts for all elements of the fuel cycle. These contracts later in the decade are being signed at much higher tails assays than have just previously been signed and been operational. So we've been in the 0.18 to 0.2 range for quite a few years. They're signing these contracts at the high 0.2s into 0.3 and beyond. So what that really means is when a utility signs this contract and they say, we need this much kGU of enriched uranium product at this level of enrichment, and we sign it at 0.3 tails, that equals an amount of UF6 they have to provide. Well, guess what? There's no UF6 to buy right now. So what does that mean? They have to contract with the uranium producers, buy uranium to feed into this fuel cycle. And a 0.3 tails assay contract is a 20% plus increase in feed demand over a 0.2 tails contract. So that jump from 0.2 to 0.3 is a 20% increase in uranium demand. We're talking very, very big numbers of uranium demand starting essentially now. So we could be seeing within a year or two, right now we're talking about 180 million pounds of uranium demand this year for 2022. We could be seeing 2024, 2025, 200, 210, 220 million pounds of demand because of this higher tails assay in these Western enrichers. That's a big, big jump in uranium demand, and the miners that can produce into this market will be massive beneficiaries of this.
Now, fortunately, Justin, I am an avid reader of your newsletter, and I knew that this whole discussion of underfeeding and overfeeding would probably confuse some of our listeners. So I've been working hard on my simplification summary of what you just said. If I am running a hand-cut French fry shack on the beach, and it's a beach, so therefore it has an off-season and an on-season. In the off-season, when demand is low, I'm going to tell my employees, look, really put some effort into cutting up those potatoes and don't waste any of the potato meat because business is slow and I want to keep my employees on board, so we really need to conserve here. But when we get to high season and there's a line of people waiting to buy French fries, I'm going to change my business process. What I'm going to tell my employees is, look, chop the potatoes as quick as you can because we need French fries and we need them now and we don't have a lot of fry-later capacity. We need to keep the process going. If that means that there's a lot of extra leftover potato meat in the scrap pile, so be it. We can afford it. In the analogy, the high tails assay is that extra meat in the potato pile. And what we can do with that potato pile is walk across the street to the breakfast restaurant next door and say, hey, you guys, I've got a whole bunch of extra potato meat in my scrap pile. You could use it to make home fries for breakfast tomorrow morning. Why don't you buy it from me? And what they're actually doing is they're enriching uranium through a process which leaves a lot more waste, which is the high tails assay. But instead of selling it to someone else across the street, they're actually kind of recycling it themselves and using it in their next cycle. Is my French fry interpretation of this reasonably close to correct?
I think that was a really, really good analogy. Most of the time, people will talk about like pressing oranges and making orange juice, but I like the French fry analogy better. That's really good. The only edit I would make is that they're not actually ending up with more tails material. It's just that the tails material has more U-235 in it at a higher tails assay. And eventually, when the cycle turns, as all cycles do in commodity sectors, right? There will be a point where Western enrichment expands and maybe demand will pull back a little bit at some point in time, and they'll be able to utilize that extra capacity to re-enrich that material. So they'll take the tails material that's at a 0.3 and they'll put it back in the centrifuge and enrich it up to 4.5 and sell it as EUP. And that's something that has been happening as tails re-enrichment. One more point on this, if I can make, Eric, really quick, is that underfeeding has been a major source of secondary supply. And that's been about 25 million pounds a year globally, with 40% of capacity being in the West. We're talking about 10 million pounds of underfeeding that's not coming into the market as UF6 into the spot market. That's because there's no extra capacity with the Western enrichers right now. And they are having to overfeed the centrifuges. Whereas when they had extra capacity, they could actually run a lower tails assay than what was in the contracts. the utilities provide that UF6, they use less of it than they need because they're at a lower tails assay. That's underfeeding. So 10 million pounds of underfeeding gone, plus overfeeding, plus these higher transactional tails that mean way more uranium buying by the utilities to fulfill those contracts.
And I want to pull this together, Justin, by going back to your original point about the uranium miners being the beneficiary of reduced Russian enrichment capacity, and tie it back into my French fry analogy, which is if you're the potato farmer, which is to say the guy who owns the Sprott Physical Uranium Trust, what happens is when demand picks up for French fries, demand for your product doesn't pick up proportionally. It's actually exaggerated exponentially because the business process is changing so that not only is there more demand for French fries, but that results in much more waste in the French fry preparation process. And it's not really waste long term, but at least in terms of immediate flow of demand, it means that when the French fry demand picks up by 50%, the potato demand is going to pick up by 80%. And that's essentially what you're predicting with a shift from underfeeding to overfeeding in the uranium enrichment process. Is that correct?
That's correct. And really, the overfeeding is part of it, and that's a smaller part of it because there's limited UF6 availability because of that conversion bottleneck currently. That gets alleviated a bit next year, but it's the higher tails assays in these contracts that really means the uranium demand, because your utility, you're signing that contract for 2025, 6, 7 delivery, you're signing a conversion contract, and then you're going to buy the uranium. So you're not needing to buy that UF6 in this moment to feed that enrichment contract. You have a few years to figure it out. So you go to the miners and you buy that uranium. That's the big demand that's coming for miners. And it's going to have a very accretive move on the price of uranium, in my opinion.
But the signal to investors that's available right here, right now, is they're signing contracts at higher tail assay values. What that means is they're signing contracts that says when we buy our next batch of potatoes, we're not going to use all of the potato meat to make French fries. We're going to essentially waste a whole bunch of it because it's more efficient for us to consume more potatoes than it is to be stingy about how we cut up those potatoes in order to use them. So there's a really good signal there that says for uranium demand, it's about to pick up and pick up substantially. And to whatever extent this bifurcation of the economy between Russia and services of Russia being available to the West continues beyond just the Ukraine conflict, the longer it's going to last.
That's correct. Unless and until we have significantly expanded capacity for actual enrichment in the West, which will happen eventually, not only with laser enrichment, but assuming that the Western enrichers do get sufficient contracts and the demand is currently there for them to invest in expanding those centrifuge cascades, they'll do so. But we're looking at, probably a 3 to 5 year time frame of much higher transactional tails, and that perfectly aligns coincidentally with the beginning and the continuation of a term contracting cycle for uranium. So for the utilities that acted early over the past couple of years and signed contracts with Cameco or Kazatomprom or Orano, and they signed enrichment contracts and locked in 0.2, 0.19, 0.21, they're sitting pretty. For the utilities that have to sign enrichment contracts right now at 0.3, they've got to buy 20 to 25% more uranium than they would have if they signed that contract 12 months ago.
Let's talk a little bit more about what's on the horizon in terms of enrichment technology. Sometimes industries get leapfrogged and people get put out of business. You look at travel agents with the advent of the internet. You just didn't need them anymore. Tell me about this laser enrichment thing. Is it really something where maybe everybody who's in the centrifuge business is just going to be put out of business one day? Or is it more of something that's kind of further out in the horizon and we're not even sure what to make of it yet?
It's definitely real. It definitely holds a lot of promise, but it is further out on the horizon. I think first, commercial availability of laser enriched EUP or enriched uranium product coming from global laser enrichment is still something like 5+ years away and minimal capacity. So it's going to take a long time for this to ramp up commercially. And still the writing is on the wall if that's exactly where the world is going in terms of uranium enrichment. I don't think that gas centrifuges will be entirely obsolete, at least not in let's say the next decade or decade or two. But eventually this could be the way that the world enriches uranium if it pans out in the way that it looks like it could. It's definitely very promising.
Moving on to the next white arrow between the enrichment circle and the fuel fabrication circle, we've got enriched uranium. Now, I'm guessing that that's not something that you're allowed to own and keep in your basement. Is there an investment play, Justin, to either own physical enriched uranium or to participate in the fuel fabrication process? Who makes money in that space?
There's only really one fuel fabricator that's publicly traded. That's Lightbridge, and they deal with an accident-tolerant fuel. It's a little bit of a black box. It looks like relatively promising technology, but that's pretty much the only option in terms of actual fuel fabrication that you can invest in.
In terms of this overall process, is there a strong correlation between the price of uranium and the price of fossil fuels? If I think there's going to be a crash in oil prices, or if I think there's going to be a dramatic oil bull market, should that change my view on what uranium prices are likely to be in the future?
They're not really all that correlated. The uranium commodity tends to sort of act on its own in terms of price movement because it's driven by its own internal fundamentals. And, interestingly enough, in a recessionary environment where you see oftentimes oil and gas have big downdrafts in the pricing during a recession, uranium is a baseload energy, and the nuclear reactors typically don't cycle down that much, even when there's reduced demand in a recession. So typically, recessionary environments don't necessarily have a direct implication on the price of uranium, nor does any correlation to oil and gas or anything else for that matter. With that said, rising fossil fuel prices do make uranium and nuclear look more attractive. That's certainly been one element that is pushing the Japanese to restart their absolutely fantastic idled fleet that's just sitting there collecting dust when they're paying through the nose for natural gas and coal and polluting their people at the same time. So it has an effect, but it doesn't actually correlate, 1-to-1 in terms of the commodity pricing.
Justin, when I read the November issue of your newsletter, Uranium Insider, something I found fascinating was this quote. You say, finally, in terms of energy density, one uranium fuel pellet, which is about the size of, a marble or something, has as much energy as 1 ton of coal, 149 gallons of oil, or 17,000 cubic feet of natural gas. These are astonishing figures. There's just no other way to put it. Now, I agree with you. They are astonishing figures, but I don't think that's actually the energy density of that pellet. I think that's just the energy density of what we know how to get out of that pellet using the existing light water reactor technology. The outcome of using that existing reactor technology is that pellet ends up becoming nuclear waste. Well, it still has 99% of the energy in it. So I think those numbers that you're quoting, 149 gallons of oil, that's actually just the energy contained in 1% of that pellet. And, on one hand, there's not a whole lot of reason to try to get more out of it since it's already so many times more dense and more powerful than any other form of energy. But hang on, since we're thinking about how to invest in this space in terms of investing in the fuel, you and I both know that there are things going on in the advanced nuclear space much farther out where they're looking at new processes to either recycle the nuclear waste or get much more efficient. If we're only using 1% of the fuel, what happens if we have some breakthrough and all of a sudden we learn to use 10% of the fuel? Does that mean that we lose 90% of the demand for fuel? And is that a risk?
Well, so far that hasn't been the case for the most part. But with that said, as even existing reactors with existing designs, light water reactors, et cetera, have improved efficiencies, that has had a nominal effect on actual uranium demand. So certainly improved efficiencies do reduce demand from the front end. That definitely is the case. When it comes to advanced reactors and some of these small modular reactor designs, that might be more efficient in terms of actual utilization of the potential energy held within that fabricated fuel. A lot of times these are running on higher enriched uranium. And so even though they can get more efficiency out of it and run for longer periods of time, they'll still have a higher enriched uranium coming in on the front end, which actually requires more feedstock to get to that higher enrichment level. So it's a little bit offset. But to your point, as efficiencies can improve for existing or new designs, they will have a net reduced effect on the actual demand for the feedstock, which is uranium. in our opinion, we will see the sector grow significantly that will far greatly outpace whatever efficiencies might reduce that demand. But to your point, there is a lot of energy left over in the nuclear waste for sure.
Justin, we've spent quite a bit of time on the fuel cycle because that's where a lot of the investment opportunity is. But I want to move on now to nuclear power technology, other things beyond the fuel cycle. So please give our listeners a quick history lesson on the recent history of Westinghouse, the dominant market player which built most of the existing nuclear reactor fleet. What led up to Westinghouse's bankruptcy in 2017? What is the backstory on the recent acquisition and bailout by Cameco and Brookfield? And what else do they need to know about Westinghouse, obviously one of the most important players in this space?
Sure. Westinghouse has been a prominent player in nuclear in the United States and globally, essentially since commercialized nuclear power has incepted. Westinghouse is involved in some way or another, whether it's through the actual construction of a reactor or the manufacturing of elements that go into a reactor, providing elements for reactors operations with half of the world's fleet. They have upwards of 20,000 employees. They're an absolute major player. They did get in trouble in the last decade, ended up filing for bankruptcy and got bailed out by Brookfield. A lot of that had to do with the massive cost overruns at the Vogtle plant that's being constructed in Georgia that is set to come online, I believe, next year, finally. That's been a major headache for nuclear in the United States, which is one reason why the United States is pushing so hard towards advanced nuclear and SMRs. But this recent deal with Cameco, I find to be a really, really intriguing deal. I think that Cameco is making a big bet on the future of nuclear, and they're diversifying obviously beyond just mining uranium and converting uranium. So it's a very, very exciting space. Westinghouse, importantly, one of their business elements is they are able to make the unique fuel rod design for the Russian-designed VVER reactors. And I believe there's something like 35 of these reactors in Eastern Europe that are all looking for all elements of the fuel cycle, but in particular the fabricated fuel away from Russia. These are reactors in Eastern Europe. They don't want to deal with Russia any longer, but they have these Russian-designed reactors that take this special type of fuel rod. Now, Westinghouse has been able to make this for quite some time, but obviously Russia produces it probably faster and definitely cheaper. Well, now that we have these geopolitical realignments happening, this is a really big market for Westinghouse to step into in a big way, and Cameco stands to benefit from that. It's also just kind of taking a zoomed out viewpoint, seeing a company like Cameco that's known as a uranium miner make such a big bet on this very innovative, very highly valuable in terms of human capital and intellectual capital company making a bet on the future of nuclear itself. I find to just be very encouraging and a very interesting play. I don't think the market quite gets it yet. And until the deal is fully signed, sealed, and delivered, we're not going to really fully understand the profit margin potential from their operations. Definitely looking forward to hearing that coming out of Cameco in the coming quarters as the deal is signed.
Okay, so Westinghouse is not a directly investable entity. It is a subsidiary which is owned 49% by Cameco and 51% by Brookfield, which is a private equity fund. I'll come back to Brookfield in a minute, but since Cameco is the public equity that you can invest in, tell us a little bit more about Cameco. Is it a company that you own? Why or why not? Is that a major company that people should be thinking about as an investment play here?
I think Cameco is a very, very interesting investment. I think it's obviously a darling of the institutional investors, not only just because of its size and liquidity, but it's really in the catbird seat here in terms of being a prominent, large producer of uranium in the West, trustworthy, consistent, reliable. They really are sitting in a very great position here as this market bifurcates. So I think it's an absolute must in terms of investors taking a look at the company for exposure for the coming bull market, definitely.
Before we move on to small modular reactors and other advanced nuclear plays, what are the other public equity players in the conventional light water nuclear space? And where are the best opportunities that you see, aside from Cameco and Westinghouse, to invest outside of the fuel cycle itself?
Well, honestly, there aren't that many, and there's not a lot of credit that the companies that you can invest in will get for their role in nuclear. So, for example, you can invest in GE, and GE Hitachi are a prominent player in the nuclear reactor build sector. But the stock is basically giving zero credit for that part of their business. So it's not really a leveraged play on the building. You also have a company like Rolls-Royce, for example, that is designing and set to build SMRs. The first ones are set to be built in the UK. That company also is going to, at least as of now, have essentially no credit whatsoever from the market for that element of their business going forward. You have a company called NuScale, which is recently IPO'd this year. They have a small modular reactor that actually is a light water reactor technology. They're the only company that has NRC approval for an SMR design. They're working on developing a 6-module unit in the state of Utah. That's in the works currently. But as far as exposure to the actual build-outs, the builders of the nuclear plants, not a lot of options in the public space.
And let's move on and talk about SMR, small modular reactors. I think you and I are in agreement that if you look at what's wrong with this industry, it really is the cost overruns in large bespoke public works projects, like the Vogtle power plant in Georgia, which literally bankrupted Westinghouse in 2017. I think the way of the future is to build nuclear reactors in factories with incredibly high quality standards and ship them to where they're needed. The only pure play that I'm aware of is NuScale, which is ticker symbol SMR. That, as I understand it, is not doing anything advanced nuclear. They're basically just building old school light water reactors, but they're doing it in a form factor that can be built in a factory and shipped to where it's used. Tell us a little bit more about NuScale and whether that's the best investment, what else we should be thinking about in terms of small modular reactors.
Sure. Yeah. And I'm right there with you. I think building these things smaller and faster and getting them into fleet mode is really the way forward. NuScale, as of now, is still the only SMR play that is publicly investable. There is another one that will be IPOing next year via a SPAC, that is X-Energy. X-Energy is a high temperature gas cooled reactor that has a lot of industrial applications. X-Energy, along with TerraPower's Natrium reactor, were the 2 reactor designs that were awarded the funding from the DOE for the demonstration project. That was, I believe, $1.2 billion in funding that went to these 2 projects. TerraPower is private. It's owned by Microsoft and Bill Gates. Warren Buffett's an investor in the company. And their first Natrium reactor is set to be constructed in the state of Wyoming. They actually just announced yesterday that there would be potentially up to a 2-year delay, having basically to do with the fuel, and they will be running on HALEU. And as we both know, there is not yet a HALEU circuit in the United States. They were initially relying on getting that initial core of HALEU fuel coming from Russia. And the US DOE is saying we probably won't have that fuel until 2030. Hopefully they can get their act together prior to that, but it is what it is. Either way, the construction for that Natrium reactor is set to start in 2025 in the state of Wyoming to replace a former coal plant. It's just a really, really exciting space. There's so many innovative designs out there. GE Hitachi's BWRX 300, that's a boiling water reactor, 300 megawatt reactor that's being built. The first one's being built in Ontario, Canada at the Darlington site. That broke ground a couple of weeks back. There is a lot of enthusiasm around these designs. But as far as investable right now that are public, it's literally just NuScale. That is going to change. I think we are likely to see 1 to 2 of these companies go public on a year-over-year basis going out for the next 5+ years. There's just that much interest in the space.
Justin, let's move on now to private equity and other investments restricted to accredited investors and qualified institutional purchasers. I appreciate this is not your primary area of focus, not really what your newsletter is about, but you're still the guy that knows as much as anyone else I know about this. So hopefully you can fill in a few blanks for our accredited and institutional audience. Let's start with Brookfield Business Partners, which is a Canadian private equity fund. They are the controlling interest partner alongside public company Cameco, which we discussed earlier in the bailout and acquisition of Westinghouse. So for qualified investors, does it make more sense to invest in Cameco or Brookfield? And maybe we should start with who are these Brookfield guys and what is their role and how come they're the 51% player next to Cameco in this Westinghouse acquisition? And why don't we start with that and then move on to, which one does it make sense if you're able to invest in either? nuclear, should you be looking at an investment through Brookfield or through Cameco if you're interested in Westinghouse?
I would go with Cameco, although I think that Brookfield is a very interesting play. I think that this acquisition of Westinghouse, coming from an entity that's been entirely focused on renewable energy up to this point, is a very, very interesting sign for the sector. I really appreciate that those that are focused on clean energy going forward are embracing nuclear, and I think that was a big sign coming from Brookfield.
Justin, Mark Nelson told me off the air after last week's interview that most of the advanced molten salt reactors, thorium-fueled design initiatives, and so forth tend to be self-funded pet projects of billionaires who seldom offer equity to outside investors on favorable terms. One example of that is Bill Gates' project on the Natrium reactor, which, as far as I know, is not investable by anybody other than Bill Gates. For non-billionaire listeners who can't afford to just launch their own molten salt reactor research company, are you aware of any other advanced nuclear private equity plays that are worth considering?
There definitely are some out there. I don't want to speak specific names, but they do exist. I would definitely say if private equity investors look for conferences that are focused on SMRs and advanced nuclear, they're going to come across a lot of opportunity in the private space.
I definitely agree. I'm actually in the process of due diligence right now on an investment in this space. I'm not going to talk specifically about the company because, frankly, their current capital raise round will have closed by the time this episode airs. But there are people doing really, really exciting things. I'm looking at a company that's building reactors that will consume a combination of thorium and existing nuclear waste. So they're actually going to recycle nuclear waste that already exists, burn that plus thorium as their fuel, and not create any more nuclear waste, but reduce the amount of nuclear waste in storage. So there's some really exciting things going on. I really should caution our listeners, though, of what I'm calling the Mike Alkin doctrine, which is the reason to invest in something like that, the reason I'm looking at a small investment in something like that is because I'm so excited about the future of what some of this advanced nuclear technology is going to mean for the planet. Frankly, it's probably not a very smart investment right now. These things are so early stage. There is no regulatory framework. You know, the company that I'm looking at is literally working incredibly passionately to build a machine that is literally not legal to operate in any country on the world on speculation that the bureaucrats will eventually come around and recognize that it could save the world. That's frankly not a sound investment play. It's a way to participate, if you can afford to, in trying to make the world a better place. So I think we have to keep in context that some of those more advanced nuclear plays are probably not ready for primetime investment quite yet. Anything else that you would like to add to this conversation, Justin?
No, I don't think so. I mean, I think really to sort of sum up sort of the long-term vision that I'm starting to, or not starting to, but really kind of formulating in my mind for the future of nuclear has to do with the benefit of the future of humanity, really. I think it's unbelievably important that we continue to move forward in terms of seeking energy sources with a higher return on investment, not a lower. And I think it's only going to play out and become more obvious as situations like Germany and Belgium are in the public eye relative to the countries that are kind of first movers in this re-embracing of nuclear. They're going to be sort of winners on the world stage due to that abundant, cheap, baseload, clean energy that nuclear can provide. So I honestly think we're kind of in very, very early stages of what feels to me like a full-on nuclear renaissance. And we also, on top of that, just have kind of that short of the midterm potential for this to be a really shockingly fast and robust bull market for uranium that could happen at any time based on capital flows. So it's a super exciting space. It's a feel-good investment. And I just don't get tired of talking about it, writing about it. So I thank you so much for having me on.
Well, I'm really excited about it too, Justin, and I agree completely. This is potentially the salvation for the energy policy future of humanity, because we're headed into an energy crisis that's going to be really ugly. And unfortunately, what scares me, and I do want to ask you to comment on this, is it's so easy for you and I to say, okay, we can see the answer. The answer is nuclear. We've been ignoring it for decades. we need to wake up and recognize that it's been staring us in the face for 30 years now. But hang on a second, Justin. You and I both know that there's one thing that is more true of nuclear than any other form of energy, which is it takes a long time from deciding that you're going to do it until the production capacity actually comes online. Now, if we think about the energy crisis that I'm convinced is coming in the next few years, it's going to create a forcing function that I think will change public sentiment, because all of a sudden we're going to desperately need to find alternatives to fossil fuels that are more affordable, because I think fossil fuel prices are going to go through the roof after we recover from the coming recession. Thing is, if everybody says, okay, nuclear is the answer, we finally get it, let's do it, how long does it take before all of that capacity actually comes online? And what does that mean in terms of the investment play? And is there something to invest in that accelerates that pace?
Great questions. Honestly, the time frames for construction of new nuclear really has a lot to do with who is building it and where it's being built. And so using Vaudan or Flamanville in France as examples, huge cost overruns, huge delays. Those are examples on one side of the spectrum. Then you have the Japanese building a boiling water reactor in Japan in 36 months. That's on the other side of the spectrum. Then somewhere in the middle would be, the South Koreans building reactors in the UAE and doing them on time and on budget over about 6 or 7 years. So starting out with new builds now, it depends on where they're being built, and it depends on who's doing the building. But that capacity could be online in a 5 to 10 year time frame. But again, remember, there's 60 reactors under construction right now. There's 20 to 24 that are going to hit the grid in the next 24 months. Add to that the fact that the energy crisis that Europe is currently in, a number of other places in the world are currently in, are highlighting the benefit of nuclear when you don't have political ideologues shutting them down in Belgium and Germany. But there's exceptions to that, obviously, where we're seeing life extensions happen for existing nuclear. So the life extensions and the Japanese restarts are almost instant demand. So if you have a reactor that's set to come offline, like Diablo Canyon, 2024, 2025, they get that 5-year extension. Well, guess what? PG&E is already in the market buying uranium. That's just how it works. So anytime there's a life extension, that's immediate demand. Anytime there's a restart of a reactor, Japan still has 23 reactors that are idled that could be operable. That would be immediate demand. In some cases, there's some inventory still left in Japan, but in many cases, they would be signing contracts with producers. But yes, how to invest on that accelerant? Honestly, the SMRs have the most potential to be a fix for that. And I think that while you have in some cases, large-scale reactors taking a very long time and actually influencing the cost of electricity due to the payback period once they actually get up and running. If you can build something smaller and faster, even though you're not getting that economies of scale that you would get by building a larger version of the same thing, just getting it done faster in this interest rate environment means significantly lower cost of electricity. And obviously that will help with the embracing of that technology going forward as well. So just keep an eye on the SMR space. I think it's extremely exciting. We're going to see more and more opportunities to invest in there as the years go by during this market. But, the life extensions and the reactors already under construction, the demand for the next, 5 to 10 years is already kind of the writing's on the wall for that.
I couldn't possibly agree more, Justin. And, I think of the analogy of World War II. When World War II broke out, they said, okay, we've got to take what we've learned about manufacturing automobiles on assembly lines and apply it to building tanks and military airplanes and so forth. And there was a government-led massive national effort to just scale up to build things quickly in factories on assembly lines. And the company that I'm in due diligence now with is a private placement in the SMR space. You talk about the problems with a project like Vogtle and the years and years of cost overruns and schedule delays. Although these small modular reactors are much lower capacity, they're only 100 megawatts of capacity or so, as opposed to 10 times that in a full-scale nuclear power plant. The thing is, even the fast-build nuclear power plants take 5 or 6 years to build. The company I'm talking to has a vision of building 100 megawatt small modular reactor per day on an assembly line, 365 reactors per year if they get to running 7 days a week. That, I think, is going to be the solution, but it's not 365. I think it's 3,000 or some larger number. And the architecture that they're working on is one where you build that large plant by putting 20 or 30 of these small modular reactors all in one building, hooking them up together in order to produce enough power to do the equivalent of what we do with large nuclear power plants today. So I think that's the direction of the future. It's going to take us a while to get there. Unfortunately, I think it's going to take a sea change of public sentiment. The energy crisis that's coming in the next few years will probably provide that public sentiment sea change, and it's going to be really interesting to see where this all goes. Before I let you go, Justin, I want to talk about Uranium Insider. This is really an exciting product. I have really enjoyed my personal subscription so far. I've only been a subscriber for a few months, but you've got, 359% inception to date return to your subscribers in terms of the stocks that you've recommended, so your performance has been terrific. So please tell us what people can expect to find in the newsletter. How much does it cost? How do they get it? Is it possible to get a sample issue? How does this work?
Yes, definitely. You can get a sample issue. I'm sure you can provide a link in the show notes there, Eric. I'll send that over to you. So we do a monthly newsletter that's very in-depth. It's largely focused on the macro fundamentals. A lot of what we've talked about today goes into these newsletters in terms of really digging into the fuel cycle and understanding what's going on in the fuel cycle, because we feel it's paramount in order to be able to have the conviction that's sufficient to hang on in such a volatile market. And uranium is up there, perhaps not as volatile as something like cryptocurrency, but it's almost there. When it moves really, really hard. And so that volatility can really shake out a lot of speculators that don't understand the fundamentals and don't see what we believe we see that's coming for this market in the short, mid, and long term. So we go really in depth. That's usually 35, 40 pages. We do one newsletter every month. I do almost every day an update video that goes into anything worth sharing in terms of fundamental developments and news flow and any developments on the charts. And of course, we focus also on the funds flow into the ETFs, the share issuances or redemptions, and what's going on with the Sprott Physical Uranium Trust, because it has such an impact on the spot market. We cover all of that in a daily update video. We do trade alerts that go out via email. If we're trading in and out of any of our positions, for the most part, we generally buy and hold for the long term, but we do have a trade here and there. We just made a trade over the last couple of weeks. And then we do members-only webinars. We do one of these a month. I really think these have been one of the biggest value adds for our service. These are members-only in attendance. We do 2-hour-long video live webinars, and we typically have a guest on that's either somebody from the nuclear industry that's an expert on their particular field in the industry, or a member of management from one of the companies that we own and recommend. And these have been really fantastic experiences for us and for our members. The newsletter service is $5.97 for the year, $197 for a 3-month period. And that whatever price you pay to join now, you lock that in for as long as you want to renew. And like I said, we live, eat, and breathe this stuff on a daily basis. And I think that when the sector moves, it's going to move in a pretty wild fashion. And I think that the fundamentals will eventually play out. It's obviously been a difficult year for most markets, with few exceptions, oil being one of those. Even with that, it's had a pretty good pullback here. But I think we're down about 15% on the year, but we were up 127% last year. So, that's how the markets work. You have up years and down years, and hopefully your up years vastly outpace the down years. So far, that's been the case. And I think we're on the cusp of another really, really big move for the sector in the coming months and years. So really looking forward to that. And thank you again for having me on, Eric.
And listeners, you'll find a link in your Research Roundup email to a sample issue of Justin's newsletter, the Uranium Insider. If you want to subscribe, just go to uraniuminsider.com. Patrick Ceresna and I will be back with my own closing summary of this year's 2-part holiday special as Macro Voices continues right here at macrovoices.com.
Now, back to your hosts, Eric Townsend and Patrick Ceresna.
Eric, great interview with Justin. I know you're getting really excited about the coming bull market in nuclear, so let's close this year's year-end special with your own investment strategy for playing this market. And let's start with the sequencing of market events. As you said yourself in both interviews, public sentiment couldn't be a whole lot worse for nuclear. And while Justin made some excellent points about the war cycle depriving the West of Russian uranium enrichment services, I also got the impression that you see a longer-term bull market narrative starting to unfold. Please share that story with our listeners now.
The story starts with what you can find in Justin's newsletter. Despite the god-awful public image nuclear energy presently has, there's still a bull case for uranium and uranium mining companies right now because the fuel cycle is shifting from underfeeding to overfeeding, and loss of Russian enrichment services will exacerbate that trend. So there's already a bull case here, but in the grand scheme of things, this is just an interesting investment play right now, not a major market trend like the internet boom of the 1990s. I'm convinced that a 1990s internet technology-sized boom is coming for nuclear, and I don't think it will bust the way the dot-coms busted in 2000. But it's not time for that yet. The nuclear energy bull market is only in its infancy. Think 1992, when software professionals knew what was coming, but to everyone else, the internet was just a fad. And just like 1992, there's definitely some money to be made right now. But the really big moves, I think, are still a few years out. Obviously, long-term predictions are never right in every detail, so please discount what I'll say next accordingly. I'll lay out the whole story now as I see it presently, but please keep in mind that the more dominoes we line up, the less certain the predictions are with each subsequent prediction. Number 1, uranium and uranium miners will outperform the broader stock market for all the reasons Justin explained in today's interview. That story starts right now. But frankly, I think the story ends there until a catalyst emerges to change things. It's a bull market in uranium because the existing reactor fleet needs fuel that probably won't be available from Russia like it was before the war cycle began. But overall, my prediction is that all things nuclear will continue to be despised by governments and the climate change community, despite the inherent fallacies in most of their objections. Specifically, I predict that nuclear will stay public enemy number 1 in terms of public perception and government policy until something happens to force a change of perception and policy. And that won't happen until we get to step number 4 later in this story. Step number 2. There will almost certainly be a global recession, and the broader stock market will probably find lower lows. The S&P 500 was above 4,000 when this was recorded, and I'll be surprised if that lasts much longer. But anything's possible. Because I think another big leg down still lies ahead for the broader market, I'll be buying the dips on physical uranium through SPUT and YCA. But I'll probably wait until I think the bottom is near for the broader stock market before moving into more speculative plays like junior uranium miners and small modular reactor companies that have yet to ship their first product. As I mentioned in today's interview, I'm already looking at a private placement in one particularly forward-thinking SMR company whose strategy is to burn thorium plus nuclear waste from existing reactors as fuel. But frankly, the only reason I'm even considering that one is that as a technologist at heart, frankly, I just can't resist wanting to be part of something as cool and exciting as thorium-fueled molten salt SMRs. But frankly, this stuff is still super early stage, and it's a lottery ticket trade that doesn't make sense unless you're completely comfortable with the most likely outcome being 100% loss. So I don't recommend investing in this sort of thing to others yet, despite the fact that I'm not following my own advice. If you're like me and can't help yourself, do it in small enough size that you can take 100% loss without regret. Number 3. What happens to oil prices during the coming recession is an open question, and I predict it will have a huge impact on the timing of the nuclear renaissance really taking off. So let me cover that next. When this was recorded in mid-December, the crude oil curve was in contango, suggesting that oil prices still have lower to go. This stands at odds with generational lows in global inventory and China abandoning its zero-COVID policies just one day before I recorded this segment. So my point is, I don't know yet whether China demand and low inventories will reverse the downward trend in oil prices when this was recorded, or if we still have lower to go before the bottom is found. If demand really falls off a cliff in the coming global recession, it's entirely possible that crude oil prices will keep selling off. If that happens, nobody outside of Europe will think there's any energy crisis to worry about until the recession plays out first. Conversely, if it turns out that the oil market really can reverse direction to the upside after China comes back online in early 23, even in recession, as Saxo Bank's Ola Hansen, Goldman Sachs, and others have predicted may occur, then the coming global energy crisis will hit the tape before the recession ends. So bottom line, I don't know whether a big rise in oil prices leading to the widespread recognition that we have a global energy crisis on our hands is going to happen during the recession or after the recession, but I'm convinced it's coming sooner or later. Still another possibility is that rising energy prices will be what prolongs the coming recession, in which case we could see only modestly higher oil prices preventing recovery, possibly for a period of years. One way or another, energy demand eventually will exceed energy supply, and Band-Aid solutions like raiding the SPR will only work for so long. Again, I don't know whether the catalyst will be China reopening in early 2023 or the Biden administration running the SPR dry later in 2023 out of desperation, or demand recovering after the recession runs its course sometime in 2024. But one way or another, because there's been essentially no investment in recent years in building new spare production capacity, and because OPEC Plus is already producing as much as they can, eventually the world will be forced to confront the reality of oil price inelasticity. Crude oil prices will move dramatically higher. Supply won't be able to keep up with demand, and we'll be looking at gasoline and natural gas prices double what they are today. My tentative prediction is that this energy crisis, being recognized in the form of dramatically higher oil and natural gas prices, will be the forcing function that will make energy policy an extremely contentious subject of public controversy. People who really understand the problem will do our best to explain why climate policy, despite having laudable intentions, actually caused this crisis. In fact, I'm already mulling the possibility of producing a documentary on that subject myself. But we'll be met by ardent climate extremists who will insist that fossil fuels must be phased out even before viable replacements are phased in. And they'll continue to make their points using sophisticated tools of logical argument, such as supergluing themselves to runways and throwing tomato soup on centuries-old classic artworks in museums. Trying to guess how a major public policy debate like that will work out is tricky business, to say the very least, and we're already a few dominoes into this speculative analysis. But my hope is that it will eventually lead to the inescapable conclusion that's already clear to the smartest people in the room right now. We need to invest heavily in advanced nuclear technologies and eventually get to a completely green energy ecosystem powered by a combination of renewables and next-generation nuclear energy using molten salt, thorium fuel, and other advanced technologies that overcome the remaining bona fide objections to nuclear energy. But it won't be practical to just start building waste-burning thorium reactors from day one. So we'll have to start by investing in more conventional nuclear, and yes, even in more oil and gas exploration and production in order to meet our needs until we can build out enough nuclear and renewable capacity to completely phase out fossil fuels. Number 5. This is a speculation, so take it with a grain of salt. But my hope and tentative expectation is that today's ESG movement, where institutional portfolio managers could get fired just for having anything nuclear in their portfolio, will give way to a new, better informed ESG movement in which institutional portfolio managers can get fired for not having several strong nuclear energy holdings in their portfolio, because in this newer, better ESG movement, advanced nuclear power that completely avoids light water reactors is finally recognized as being just as green and just as climate friendly as wind or solar. Number 6. If it plays out that way, we'll have a repeat of the tech boom of the 1990s. And just like the 1990s, 99% of the Wall Street guys running the money will have no clue what they're buying. The pets.com of nuclear will be SMR companies based on light water generation 3 technology. But those stocks will be hot because having SMR in your name will be as cool in the mid-2020s as having .com in your name was in the late 1990s. Investors who paid attention to macro voices and continue to learn more in coming years will recognize that the real long-term play is in molten salt, waste burners, and thorium, which 95% of Wall Street will still never have heard of or understand. Number 7. And sadly, it's still going to take a very long time to build out all the nuclear power generation capacity we need. During that time, there will be resource wars, and the skyrocketing price of oil will likely cripple the global economy, leading to who knows what kind of geopolitical and social outcomes. All of that could have been avoided had the people behind the early ESG movement done their homework and realized that nuclear energy was the greenest energy there is, provided that you move beyond the old light water technology and take advantage of newer and better nuclear solutions. But sadly, they'll never admit or even recognize that they were the cause of this problem.
Okay, Eric, that covers your best guess on how the dominoes will line up and play out for the nuclear energy in the coming years. And listeners, please heed Eric's warning that this stuff is all speculative best guesses and nobody ever gets such scenarios exactly right. Now, Eric, let's talk about how to play this as investors. What's your plan for investing in nuclear energy as this unfolds?
First and foremost, as you just said, Patrick, this stuff will change with time, and my own investment strategy will change accordingly. So the best I can do to answer that question is to lay out my tentative plans based on how I see the market right now. Those plans will change over time as news happens and new technology advancements emerge. Number 1. I want to be part of this trend, and I don't want to risk missing it. So I've already started investing in this space, despite that I'm convinced the bottom isn't yet in for the broader bear market in stocks. So I'm doing several things right now. First, I'm buying SPUT and YCA on the dips to accumulate a position in physical uranium. The logic there is that for the reasons that Justin cited in today's interview, it's hard to see uranium prices crashing from here, even if the stock market crashes, because existing power plants need fuel and Russian enrichment services probably won't be available to the West. This is a conservative play, and I'm overweighting it because I'm afraid that junior miners and other leveraged plays could get clobbered in the next down leg of the broader bear market in equities. Next, I'm also accumulating a small number of URNM shares, which mostly holds producing uranium miners as opposed to the more speculative juniors, and because it's a very liquid ETF and feels like a more conservative play on the mining stocks. But I'm only dabbling in small size for now, since I think the broader bear market will probably drag URNM lower before it moves much higher. Next, I'm following Justin's newsletter and his recommendations very carefully. But I'll probably hold off on any big positions in junior miners until I think that we're closer to a bottom in the broader equity market. Next, I already bought just a small position in NuScale, ticker SMR, just because it's the first and only publicly traded pure-play small modular reactor company so far. Frankly, I think it's the least exciting SMR company in terms of technology sophistication, but first to market always gets investor attention, and I wanted to get at least some token exposure to this exciting new market sector. But I'll save investing in size in SMRs until there are better market conditions and until there are public companies that make more advanced SMRs than the light water design that NuScale is developing. And finally, by the time you hear this, I probably will have completed a small private placement investment in a company that's still at the prototype stage of building an SMR that will burn thorium plus spent nuclear waste from existing early generation nuclear power plants as its fuel. Quite frankly, the investment thesis there is just that I couldn't help myself. I've been fascinated by the possibility of a thorium-fueled nuclear renaissance since I first saw Kirk Sorensen's videos more than a decade ago, and the technologist in me just can't resist wanting to be part of it. But quite frankly, there's no regulator on Earth that's ready to permit a thorium-fueled nuclear reactor yet. So this is a lottery ticket trade that's at a small enough size that I can afford to shrug it off if it turns out to be 100% loss. Moving on to step number 2 in my overall investment thesis: hurry up and wait. It's still very early in this nuclear story, and assuming I have the recession call right, I think the broader stock market is near the top of a bear market rally. Remember, the S&P was at about 4,000 when I recorded this 2+ weeks before you're hearing it now. There will be plenty of time to buy uranium mining stocks before the really big moves come, and there's a lot to be said for saving plenty of dry powder for better buying opportunities before diving into nuclear investing head first at what might be a peak in the broader market. Number 3. When I become convinced that the broader market bottom is near or has already passed, I'll change strategy by underweighting the physical uranium and overweighting uranium miners which offer more leverage to the price of physical uranium. I'll also start to consider much larger positions in more speculative junior miners, and Justin's Uranium Insider newsletter will be my primary source of information on those companies. And that's also when I'll start adding significant exposure to bellwether stocks like Cameco, which appeals now, but will probably get cheaper before the broader bear market is over. I'll also be watching for IPOs in the SMR space and will take particular interest in those that appear poised to quickly ramp up volume production in response to the coming energy crisis. When this situation turns into an emergency response to a global oil price crisis, what's going to matter most is not who has the coolest advanced technology, but rather who's best able to quickly ramp up to deliver SMRs in volume. When oil prices skyrocket, we're going to need lots of reactors, and all that will matter is who can make and deliver SMRs the fastest, not the best. Few market participants will even understand or appreciate the merits of advanced molten salt designs over light water designs. Time to market is what will matter, and that's going to be my primary criterion in choosing SMR investments when the time comes. Number 4. Even more important than waiting for signs of a bottom in the broader equity market, I'll be watching the crude oil market very closely. If the geopolitics change and suddenly crude oil prices start to rocket higher, I won't wait for the bottom in the stock market before accelerating the pace of buying uranium miners and other nuclear-related investments. My rationale here is that while obviously it's better to buy stocks near the bottom of a bear market as opposed to halfway down, which is where I think we are right now, the benefit of buying near the bottom of the broader bear market pales in contrast to the importance of getting fully invested in nuclear before the coming energy crisis really takes hold. Right now, with the crude oil curve still in contango despite record low inventories, I'm holding off on buying nuclear aggressively. But I'm convinced the really big attitude change on nuclear will come with the realization of the coming oil price energy crisis. So bear market or no bear market in stocks, if oil prices really start to take off to the upside, I'll step up the pace of buying my nuclear portfolio. And finally, number 5, much longer term, what I'm personally most excited about is the possibility of a thorium-fueled nuclear future. But frankly, I have a very long track record of having the right idea way too early and trying to invest in leading-edge things before the market leaders have even been identified. I'm already investing in one thorium SMR startup now because, frankly, I just couldn't help myself. But I know it's way too early. Molten salt and eventually thorium are the way of the future. But the nuclear power revolution is going to start with a light water reactor renaissance before the advanced nuclear technologies even have a chance to take hold. So as much as the technologist in me wishes for a different reality, the most profitable early plays in the SMR space will probably be in light water SMRs like NuScale. The advanced technologies like molten salt and thorium are orders of magnitude more compelling, but it's too early to justify investments in them at this time because it's unknown how long it's going to take before regulators open their mind to permitting a new fuel such as thorium. Beyond those 5 steps, Patrick, who knows? I'm sure most of what I've just discussed will probably have changed long before we even get to the point that there's a choice of pure plays in the SMR space on the public market. In closing, we're in the infancy of this nuclear bull market, and it's still way too early to know how it will shape up. Stay tuned to Macro Voices for updates as the market evolves. This episode of Macro Voices was made possible by Respect Energy, a leading European trader of renewable energy and a one-stop shop for all green energy investors.
And that's a wrap for our holiday special on nuclear energy. Be sure to stay tuned again next week when we'll return to our regular show format with post-game segment on January 5th. You'll find Justin's slide deck and download link for the free sample issue of his Uranium Insider newsletter in this week's Research Roundup email. So that does it for this week's episode. We appreciate all the feedback and support we get from our listeners, and we're always looking for suggestions on how we can make the program even better. Now, for those of our listeners that write or blog about the markets and would like to share that content with our listeners, send us an email at researchroundup@macrovoices.com, and we will consider it for our weekly distributions. If you have not already, follow our main Twitter account at MacroVoices for all the most recent updates and releases, and you can also follow me at Patrick Ceresna. On behalf of Eric Townsend and myself, thank you for listening, and we'll see you all next week.
That concludes this edition of Macro Voices. Be sure to tune in each week to hear feature interviews with the brightest minds in finance and macroeconomics. Macro Voices is made possible by sponsorship from BigPictureTrading.com, the Internet's premier source of online education for traders. Please visit BigPictureTrading.com for more information. Please register your free account at MacroVoices.com. Once registered, you'll receive our free weekly Research Roundup email containing links to supporting documents from our featured guests and the very best free financial content our volunteer research team could find on the internet each week. You'll also gain access to our free listener discussion forums and research library. And the more registered users we have, the more we'll be able to recruit high-profile feature interview guests for future programs. So please register your free account today at macrovoices.com if you haven't already. You can subscribe to Macro Voices on iTunes to have Macro Voices automatically delivered to your mobile device each week free of charge. You can email questions for the program to mailbag@macrovoices.com, and we'll answer your questions on the air from time to time in our mailbag segment. Macro Voices is presented for informational and entertainment purposes only. The information presented on Macro Voices should not be construed as investment advice. Always consult a licensed investment professional before making investment decisions. The views and opinions expressed on Macro Voices are those of the participants and do not necessarily reflect those of the show's hosts or sponsors. Macro Voices, its producers, sponsors, and hosts Eric Townsend and Patrick Ceresna shall not be liable for losses resulting from investment decisions based on information or viewpoints presented on Macro Voices. Macro Voices is made possible by sponsorship from BigPictureTrading.com and by funding from Fourth Turning Capital Management, LLC. For more information, visit macrovoices.com.